I don't necessarily think that the banks are staging this like covert attack on destroying Bitcoin, because they already understand they can't destroy Bitcoin. What they want at this point is they want to own a stake in the companies that own the most Bitcoin. Saylor posts a picture of him at some of the largest banks in the world. You can tell he's not there fighting with them about why are you trying to take me down. He's there talking deals with them and how they can advance their capital market operations and how he can issue more debt and more equity to get more Bitcoin. The third piece of the puzzle that the US does not have, I think the whole 4-year cycle narrative is going to get obliterated. And you got the 3 green, 1 red candle, and we're on pace for 2 red candles in a row. The United States is starting to realize that like if they're in this AI arms race almost versus China, if Bitcoin at its core is a competitor to the dollar, then
What's up, guys? 70,000 of you guys keep coming back every single month, but 71% are not subscribed. So you're going to miss out on some of the great green candle content. So make sure that you're hitting that subscribe button with the bell notification so you get notified every time I drop a video. All right, now let's get back into this great interview. Bing bong, I am back with another edition of the State of Bitcoin podcast, where I've got the man, the myth, the legend, Billy of Simple Mining. But Billy, we were just talking a little bit about this pre-show. There's a lot of interesting things going on, specifically with the big banks and how they're looking at Bitcoin, because the rumor is right now that these big banks, JP Morgan and all of these guys, they're saying a lot of positive things about Bitcoin in the media and doing all these different things, but behind the scenes, they're secretly attacking Bitcoin and people like MicroStrategy and Michael Saylor. So I'm curious, what do you think of all of this going on and these big giant players now starting to get into the Bitcoin space?
Yeah, I appreciate the exciting intro, Brandon. Thanks for having me on. Great showmanship. Do I think that banks are attacking Bitcoin and I guess Saylor and strategy? I don't necessarily think that is the case. I think what banks want at the end of the day is you have the central banking cartel that they want to control the how money moves throughout the world and how money is created and how people are using money and lending and debt, like the debt system, fiat system that we live in. They want to have as much control over that as you possibly can. And that's the same with JP Morgan, the financial services complex. They want to have as much control as they possibly can. And they basically do. I mean, they're the financial backing for, apart from the Federal Reserve, which they have deep connections with the Federal Reserve. But apart from that, they want to own how money is created and how money is multiplied throughout the economy. And so if Bitcoin at its core is a competitor to the dollar, then and I'm sure they figured out that they're not just going to be able to snap their fingers and it's going to go away. I mean, it was on some obscure email forum to now being the 8th largest asset in the world. It's clearly not going away, and there's enough support, and there's over 20,000 nodes all over the world. It's not just going to go away overnight. So at this point, like, what's the saying? First they fight you, then they agree with you, and then I'm not sure what the third part of it is, but it's the transition from going from hating this new technology that's going to destroy anything. It was the same with like the internet, where people said, oh, it's going to take jobs, it's going to mess all this stuff up. So eventually you realize, okay, this is something that's going to be around for a while. Maybe I should start to accept it. And then you start building on it and expanding the adoption of that technology. And that, I think, is the direction that things are going in. Is you had like Operation Choke Point 2.0, where it's like, no, banks should not be messing around with Bitcoin at all. It's a tulip mania, it's a Ponzi scheme, it's all the mainstream media stuff that you heard about it. And then you had like a bunch of pieces of regulation, and you had like the Trump talking about it, and you had the staff accounting bulletin. I think it was the revision of 121, which was essentially saying that banks can now be working with Bitcoin financial services. And so now it's going to the point where it's like, first they fight you, then they join you. And so I don't necessarily think that the banks are are staging this like covert attack on destroying Bitcoin because they already understand they can't destroy Bitcoin. What they want at this point is they want to own Bitcoin and they want to own the rails that Bitcoin move on, and they want to own and have a stake in the companies that own the most Bitcoin. And like I just mentioned previously, Saylor posts a picture of him at some of the largest banks in the world, and he's there with the CEO, and he's there in a suit, and you can tell he's not there fighting with them about why are you trying to take me down. He's there talking deals with them and how they can advance their capital market operations and how he can issue more debt and more equity to get more Bitcoin. And maybe they somehow have a tie to how much Bitcoin he has, but at the end of the day, they're going to join Bitcoin. They're going to try to own as much Bitcoin as they can. And like, I think that goes to show that like it is valuable to have Bitcoin, take it off of an exchange and take it into self custody and actually like own, because that's like the backdrop to why people like Bitcoin is it's a technology that you don't need a third party to use. And the bank wants to be that third party. And that's the direction that they're moving in. And so, no, I don't think that they're attacking Bitcoin and Sailor and strategy.
Yeah, I mean that's a good point, and interesting. That you're kind of lining it out that way, and I like the way that you put it. But I guess kind of parlaying onto that. Now that we have these big money players coming in, we've already seen BlackRock. Their ETF is nearing their 2-year anniversary, and it's been this most successful ETF launch in history. I mean, it seems like TradFi is just really desiring all of these products. But when you look at the amount of Bitcoin wallets that there are, people holding in self custody, it seems like people are kind of still desiring, at least maybe in the US, these third parties and these banks to come in and hold and custody their Bitcoin. So, kind of, I guess, leveling up on that, as somebody that's working in a Bitcoin company, how has been working with banks for you guys? Have you seen any struggles? Because I mean, of course, we've seen the headlines. JP Morgan also debanking, people like Jack Mallers. I've heard it from Corey from Swan. I've heard it from Adam O'Brien at Bitcoin Well. Like all of these CEOs have been debanked seemingly because of their affiliation with Bitcoin. But, maybe the banks have other reasons. They just haven't said anything. So have you seen any, I guess, apprehension when working with banks because you guys are a Bitcoin company?
Yeah, I would say like initially, and even still now to some extent, it's very difficult to use any sort of like traditional finance, like banking or payment processing solution. Like we tried to use like initially when we first started, we wanted to use like Shopify or Square or Stripe for processing payments. Like when someone purchases a miner, we need to process that payment somehow. And so none of those, pretty much all of those companies, they do not work with crypto mining services. It's a restricted vertical, and which is kind of ridiculous because our business has some of the lowest chargeback rates. Like almost nobody purchases a machine and then tries to file a dispute, and no refunds. Like it's one of the most reputable in terms of like the money that people are paying. It's staying with the company they're paying. It's not getting a chargeback. It's not going to be an issue on the payment processor's plate. So that has been like a thing since we started in like 2020. They don't like working with crypto mining services because there's just a lot of bad information out there in terms of like, are we running a legitimate sustainable business? That's what they're trying to figure out. And I think more and more that's coming to light. Like one of the ways that we're seeing that is the ability to offer financing to our clients, like favorable financing. It's been a very difficult thing because like we have to try to work with a local bank. Most of the local banks don't really want to like take the risk on that or provide the funding for that. But now you're starting to see more companies coming out saying like, hey, we're willing to work with something like that. Like if you can show us the data and the payments history on like how exactly this works, then they're more open to it. So I would say that from Simple Mining's perspective, banks are becoming they're starting to like their ears are perking up a little bit and starting to do their due diligence into like, are these legitimate businesses, are these legitimate companies, like is crypto mining an industry that's going to be around for a very long time, and they're starting to do the research and say, hey, yeah, these guys are legit. They're starting to work more with a lot of these high performance computing companies, and you're seeing these big deals take place between Google and Meta. And they're starting data centers are like a very real thing that almost every single company in the world needs. There's a data center powering something that they're doing, and so they're starting to turn a leaf and start to see that these are more legit. And I think that's only going to improve over time. Like we're going to start seeing better financing rates for purchasing miners or purchasing high performance computing equipment, and it's going to keep going in that direction. And if anything, like I mentioned before, like they're going to see that Bitcoin's gonna is around for the long run, and it's not going anywhere, and so they're going to figure out a way to integrate it into what they're already doing.
Yeah, and how big is, I guess, the influence of these big players coming in and partnering with these Bitcoin mining companies like a Google, like a Meta? I mean, I was just looking it up. Google has secured a 10-year, 3 billion artificial intelligent hosting contract with Bitcoin miner Cipher Mining. So I mean,
Wait, what did you
obviously,
cut out on that last part? What did you say?
I said they Google secured a 10-year, $3 billion artificial intelligent hosting contract with Bitcoin miner Cipher Mining.
Yeah,
So I
so
mean, yeah, so like these big guys are coming in and making these deals, like you said, for a lot of it's for AI, but obviously they see the advantages of Bitcoin mining. So, I mean, we've seen a lot of the treasury plays kind of come in, but it seems like nothing has been making, I guess, like huge substantial waves. Like if you look at a lot of these treasury companies, they come and buy, Bitcoin maybe once, and then that's to pump their stock initially, and then you don't really hear much about them afterwards. Then following that, you see a lot of these Bitcoin mining companies now starting to come in with these AI companies. What do you think, I guess, would have a bigger impact here on just how these Bitcoin or how Bitcoin is viewed in the TradFi world?
yeah, I think there's a lot of different questions bundled into that, but I think zooming out, like big picture, a lot of these like Bitcoin mining companies, they their original goal was to mine as much Bitcoin at the cheapest cost possible when they like originated, and now they're starting to see like their monitor. They have a monetary incentive. Like if they can be a more profitable company by making one decision versus another decision, then they're going to make the decision that's in the best interest of their shareholders. And so if they have access to land and energy, and because they were originally using that to mine Bitcoin. And if now they can leverage that land and energy to make more money by working with some of these Mag 7 companies that need access to, well, I mean, they need access to compute, but ultimately to have compute, you need land and energy. And so that's sort of the decision I think that they're faced with is they're starting to see, hey, we could make either 2x our money trying to do this Bitcoin mining thing and have considerably more risk potentially, or we could go with this deal that's come across our plate where we can make 5x our money. And I mean, there's a lot of technicals to these deals in terms of like the debt that may be involved and what the future of the company looks like, but it's ultimately bullish for those companies. Like you're seeing Iron, which is a pure play Bitcoin mining company, and then they they started to make the pivot to focusing on high performance computing and the future of the AI mania, and if it is a big of a thing as people think it's going to be. And they're one of the best performing stocks this year. So ultimately, I think that comes back to I don't think that these Mag 7 companies are necessarily, or like the banks or TradFi, is necessarily thinking about Bitcoin very much when they're securing these deals. Like it's not like improving Bitcoin in their eyes necessarily. I think it's more so that everybody is starting to recognize that even with Bitcoin, the base layer of what's going to be the most valuable is going to be energy generation and access to the land and access to the grid hookups and access to a sustainable power source, that's going to be something that's going to be necessary for every company on the planet over, I mean, now and over the next 20 years. It's just going to become more and more integrated into how every single business runs. And that's why they need that. And right now, a lot of miners are starting to just make the obvious decision of, hey, this is what the market wants. We have it. Let's just give them what they want. And now, ultimately, I think that's going to be bullish for a lot of the existing miners on the network who are still pure play and maybe they don't have big AI deals on their plate, or and so they don't even have the option, or they're just choosing to remain a pure play mining company. That, like, thinking about it logically, should be bullish for them, because if all of these what used to represent hash rate is now pivoting and not representing hash rate anymore, that in effect should be, I mean, kind of the block subsidy is a fixed pie. And so if they're no longer kind of eating a certain percentage of that pie, then that remainder of that is going to go to the people, the miners that are still online and mining Bitcoin.
Yeah, so it seems like it's almost a battle for obtaining energy at this point, whether it's cheap, renewable, whatever. Just being able to obtain as much energy as possible and make as much profit off of that seems to be the play. Is that kind of what you're lining out here?
Yeah, I mean, I would say that's definitely like the direction that things are going in. And I think even like the United States is starting to realize that, like, if they're in this AI arms race almost versus China, then that is the main constraint for them, is they want to reshore power grids, energy generation, rare earth metals, copper and silver, data center, skilled labor. And so, like, AI isn't something that you can just print something and be able to grow the industry. It's running on electricity, and the US has massively underbuilt its real infrastructure for decades. And so that is something that, like, I think a lot more attention and capital and investment is going to go into those real resource constraints over the next year, the next 10 years, because that's what everything is running on.
What if I told you you never had to sell your Bitcoin? Instead, you can borrow against it with Salt Lending. Why give up your hard earned Bitcoin when you can unlock its value without letting it go? With Salt, you get secure Bitcoin collateralized loans with no credit checks, no prepayment fees, and best of all, no rehypothecation. Salt has had zero customer collateral losses since it launched. Salt was the first platform to offer Bitcoin collateralized loans starting way back in 2016. Today, they offer tailored options for both individuals and businesses. And now introducing Salt Shield, the no liquidation solution. No forced liquidations during the lifetime of your loan when you're enrolled with Salt Shield. This just launched at the Bitcoin conference in Las Vegas, and it is next level peace of mind. For Green Candle listeners only, head to saltlending.com/green-candle for this exclusive offer for your Bitcoin collateralized loan. You can get cash for your Bitcoin today. Salt Lending, secure, trusted, proven. Yeah, and it definitely seems like I guess it's trending in that direction. But something that is really interesting is we've seen China have been very apprehensive to Bitcoin mining. They recently just tried to ban it again. Last time I think we saw it maybe a couple years ago. I don't remember the exact year now at this point. But we essentially saw like a flood of Bitcoin miners go from China to Kazakhstan, and we've seen Russia sees Bitcoin miners, and then we haven't really heard much about it. They might be secretly mining, so it seems like a lot of these countries are mining, but China seems to be apprehensive against it. What do you take of all of that with the AI, I guess, arms race that the U.S. is somewhat in? Do you think that this is almost a media play, or do you think that they're actually apprehensive towards Bitcoin mining?
Yeah, I think China has a little bit more control, I think, than people realize. Like, a lot of people think, or they saw the whatever it was, 1.3 gigawatt facility that recently got shut down, and you have to ask yourself the question of, like, what are they trying to do? I mean, they stood up their grid basically stood up the entire capacity of the US grid in 10 years. So instead of like focusing on a strong currency and being the US world reserve currency, they've focused more on their grid and they've massively outpaced what the US is capable of. And so in terms of them banning Bitcoin mining, I don't think that that will necessarily happen again. I think that there's going to be, and maybe they already realized this. I'm not sure to what extent like Bitmain is tied in with the Chinese government, but eventually it's going to get to the point where you have gold becoming the new world reserve asset. It's no longer US treasuries. Like it's recently been surpassed by like central banks are buying, foreign central banks outside of the US are buying record amounts of gold, and they are forecasted to, like Goldman Sachs recently published a report where they're like, this year you thought was a lot, they're going to purchase just as much or more next year. And so if gold is starting to become the reserve asset, and it's foreign nations trying to move away from the US debt, then it's going to raise a question of like, okay, well, can the US play on sort of the currency battlefield of competing with like gold as a reserve asset? Well, they don't really like to do that because, for one, they may not even have all the gold that they say they have in Fort Knox. And so that could potentially be an issue for them, where everybody thinks they have all this gold, but maybe they don't have all of this gold. And so then, like, what advantage are they going to have if they don't have trust in their currency? Nobody wants to buy US treasuries, nobody wants to buy US debt. Then that's kind of the entire business model for the United States is everybody needing, like, the petrodollar, needing dollars to buy valuable stuff. And so if that goes away, then what advantage is the US going to have? Well, they have more hash rate than any other country in the world. They have estimated, Luxor published a report this year estimating the United States at 37% of market hash rate. I think it could potentially be more. It could be upwards of 50%. But if 37% is the baseline, that's really good, because that's the physical hash rate that, if a pool, which I guess there's multiple levels to it. There's the hash rate where the machines are physically located generating the hashes. And usually those are getting pushed to a pool, which is brings us to China. The advantage that China has is they basically have. I mean, right now you could pull up a chart on mempool.space and pull up the mining pools, and you can see that, okay, Foundry has 30% of, in terms of the blocks that are being won by a particular pool. And then you can see Ant Pool, via BTC, F2 Pool, Spider Pool. The list goes down. I mean, those are making up basically 50% or more, 60%. There's a couple others like Binance Pool, that's obviously a China pool. Luxor is allegedly a China pool. There's a lot of like other smaller pools, but like if you kind of aggregated all those together and kind of traced them back to who's actually backing these pools, who actually runs these pools, they're all going back down to Ant Pool, which is basically Bitmain. So Bitmain, they have 67% of blocks are essentially being won by Bitmain. Now that gives them, so they could ban mining and still have that sort of control over the network, just the fact that they're winning the blocks. And so, if, kind of big picture, what I'm talking about is like a new Bitcoin standard. And there's three pieces that you would need to secure yourself as like the strongest monetary power in the world, in terms of having the most, like, you'd want to have the most Bitcoin. You don't want to have the companies that have the most Bitcoin, which is like IBIT, MicroStrategy. Right there, you have, what is that, like 4% of the supply or something. So you want the companies to have the most, you want to have like the actual coins, but you also want to have the hash rate, which is producing those coins, which the US has. But if you think of the third piece of the puzzle that the US does not have, is the mining pool side, which is not as much of a risk, I think, as people make it out to be, because we have the physical hash rate. But then you have the actual machines that are generating the hashes, which is ultimately 80% of the network is Bitmain, and all the chips are coming from TSMC in Taiwan. So if they overnight snapped their fingers and said, we're shutting this down, we're not sending you anything, which I really don't think that would happen. But then how the heck are we going to start creating competitive mining machines? Like, there's Proto, which is Block's, Jack Dorsey's new venture to try to reshore ASIC manufacturing fabrication within the United States at a competitive level of 2 nanometer chips is that, I mean, when is their go to market? They had this really cool promo event with Core Scientific earlier over the summer or into the fall, and it looked really good. And it was like, hey, we're kind of bringing that third piece of the puzzle back to the United States. Is that going to happen? I don't know. I haven't seen anything. Like we've contacted their sales team, and it sounded really cool, but nothing has really come out past that. So I think that would be like if the US gets that side of things figured out, then it could be really interesting in terms of like that would be kind of the wild card that we would pull to reinstate like dollar hegemony for the next 100 years. Would be we have the best Bitcoin everything, so we're just gonna instead of the petro dollar agreement, we'll just make basically peg the dollar to like the dollar now has authority because we have all the Bitcoin power. But I
Yeah, and
mean,
I think that it's very interesting too, because I mean there's also the thought, a lot of these countries are secretly mining, and you brought up China's gold purchases. I mean, an analyst from Goldman basically came out and said that he thinks that they're secretly buying, and they're buying a lot more than they're actually reporting. So do you think that, as somebody that's looking at a lot of the hash rate, do you think that there is a chance that there's a lot of countries already secretly mining, and there's a lot of countries out there stacking that haven't necessarily come out and said it just yet?
I think that is possible. Like a lot of, I think especially if like a country understands the importance of having hash rate for the future of transacting, because you look at what happened with like Russia in 2022, where they got all of their assets denominated in U.S. debt were basically overnight worth zero, then other countries had to have seen that. And I think this is like a lot of them are moving to gold. They're thinking that gold is going to be the solution to that, which ultimately they're going to figure out that gold, if we're living in an increasingly digital world, then gold is really not going to be a solution. Like, what are you going to have a vault that's going to store all of it, get raided by a country bigger than you lose it all, which I suppose could happen if you have a bunch of physical hash rate located in your country. But right now they're moving towards gold. But if they move towards hash rate, then that's going to secure their future and the ability to add a transaction to a block. So if they wanted to send without the US government or some neighboring nation that doesn't want them to transact, if they have their own in house hash rate that could hit a block in a reasonable period of time, we'll just say like over the span of a month, they could hit one block, then they would secure their space on a financial network to be able to move money forever as long as they can keep their probability of winning a block to once per month. And that is, I think, what like maybe that's I think that's very sophisticated. Like I really don't think the leaders of these countries are or many of them are thinking that, like thinking like, hey, if the dollar is starting the faith in the dollar is starting to crumble, a lot of central banks are moving to gold. But hey, maybe we should start to kind of hedge ourselves in this scenario where we need to be able to move money anywhere in the world in a reasonable period of time without some third party or some third party government getting in the way and preventing us from doing that. Then we're going to need to start building our hash rate infrastructure. And like, yeah, that could be the case as to why we're seeing a lot of these smaller countries like the UAE is starting to grow, Paraguay is starting to grow, Russia is obviously in Kazakhstan, you mentioned Ethiopia, Indonesia, like all these countries are starting to increase their hash rate. Like, are they thinking that? Maybe. I don't know. I mean, it's kind of you got to go down the rabbit hole to see that's potentially what the future will look like. And I think even like to tie it back into banks, like maybe banks are starting to think that way, where if they want to be some of the biggest financial intermediaries in the world, then they're going to need to have some exposure and some control over hash rate, or at least like a pool to some extent to where they can have confidence in being able to include or exclude certain transactions and blocks and move them to other financial intermediaries.
This bull run, I'm looking for ways to stack Bitcoin in my sleep, and mining has always caught my eye. I've partnered with the guys over at Simple Mining to help you do just that. I don't recommend anything that I don't use personally. So I've got a machine up and running with them right this second. And they've even opened the facility up so anyone can go and visit. They manage over 15,000 machines for 500 clients, handling all of the maintenance and repairs so you don't have to. And for the Green Candle listeners, they're giving an exclusive offer. All the repairs for the first year for free. So if you've been thinking about mining, head on over to simplemining.io/greencandle to get this exclusive offer and learn about the potential tax benefits that you can get from mining with Simple Mining. All right, enough from me. Let's get back to the show. It is an interesting game theory here because I mean, there's been rumors already that like Russia was using Bitcoin and crypto to transact just internationally during our international trade to avoid sanctions
Yeah.
already. So I mean, like I said, it is all rumors. So who knows at this point? But when you see these big players kind of talking to the people like a Michael Saylor, you see Saylor going around the world and talking to all these influential leaders. You got to think that, I mean, Samson Mao as well. A lot of these guys, they're getting through to them maybe eventually. And it seems like, Eric Trump with him going around and kind of touting Bitcoin all over the place. Seems like, these big players, they're getting told about Bitcoin in big rooms, at least at this point in time. So
Yeah.
I don't think it's out of the realm of possibilities, but I also do think that governments move very slow.
Yeah,
So,
I would 100% agree with that. And I think one way that we would start to see almost like a signpost as to, hey, there's a lot of governments starting to nationalize mining would potentially be like a new mix of blocks in mempool.space. Like if you scroll through mempool.space, you can see the majority, it's like Foundry USA and a bunch of Antpool proxies. That's like all of the blocks that are being mined. But if you have a government trying to nationalize mining, they're not going to choose China pool. They're going to have an unknown pool or some obscure pool that they're like, okay, we want to secure our own block space. Then you would start to see a lot more unknown block. Like there's several blocks that you can see in mempool.space that unknown. They don't know who found it, or it's some pool that you've never heard of. You'd start to see more of those. So if you saw like, and maybe they have hash rate, but they're pointing it to China pool, which wouldn't make any sense in my opinion. Like why would they do that? I mean, unless they're just trying to do it to make money. Like they have really low cost of power and they're just purely in it from the monetary perspective and the profit perspective. But if they're in it for like the future of securing their livelihood of transacting, then you'll start to see some blocks pop up in on the chain that aren't like the normal ones that the normal companies finding them that you would see.
yeah, I gotcha. So you think that it would be, I guess, the goal of a country kind of coming in would be to more of secure the network, opposed to, just I guess, I for profit in a sense.
Yeah, I mean, it's not even necessarily like maybe their best interest is the like securing Bitcoin and adding compute to it, so it's just even more of a reinforced network. But also just like a block. Like if you think about what is in a block, you have transactions, but like let's just say Kazakhstan, for example, they wanted to send a transaction on Bitcoin, and so they're going to broadcast that transaction. It's going to go through basically Foundry or one of the China pools. And let's say both the United States and China don't like Kazakhstan. They've like banned them from being able to send transactions on Bitcoin. Then they're cooked. They can't send it because they could just exclude it from those blocks. Whereas if Kazakhstan was like, well, that could potentially be a future reality. So we need to start building enough hash rate to where we can win our own blocks. Then if they win a block, they can put whatever the heck they want in it.
What do you mean by that? Like, what do you mean put whatever the heck they want in it?
Like if they wanted to obviously include their own transaction, then nobody can stop them from doing that because the nodes are going to say, okay, this was a legitimate block. They found they got a number below the correct difficulty level, and this is a valid block, like regardless of political adversaries. So we can add it to the chain, and so that way they can send like if they wanted to move Bitcoin from point A to point B to someone else, some other country, whatever, they can do that without the United States or China filtering them out. Because right now, if the two major pools is Foundry, which is a US pool, and all of the China pools, then if those two entities that are constructing those block templates did not like Kazakhstan, they could filter Kazakhstan transactions out of getting added to those blocks, assuming they knew that that's where that transaction was coming from, which
Interesting.
wouldn't be that difficult to find out. But if Kazakhstan wanted to send, like, if they wanted to prevent that from getting sanctioned from Bitcoin, because that's a way to sanction on Bitcoin is filter. You could filter transactions out of block. It's like Slipstream Marathon's thing. If you want priority and you want to end up in a block before anybody else, then you can pay them more and they'll put your transaction, they'll basically cherry pick it and put it in their block for you. Or if you want to create a meme out of like the size of your train, like what they did with Trump and what they did with like a couple other things that Marathon has done, is basically cherry picking and constructing a block exactly how they want to. And if they can do that, they can prevent a country from sending Bitcoin to somebody else. They could do whatever they want. So if you have enough hash rate, that's what they could do. And maybe they'll start to realize like the strategic future of being able to move money digitally is going to be constructing your own blocks and be having control over what's actually in it.
Ah, interesting. So essentially, like if a country got enough hash rate, they could, theoretically just control the network to a sense where, they are not they're like eliminating transactions from a certain country, thus keeping control of the financial network.
Yeah, I think there's also to be distinguished between like the physical hash rate, which is much more difficult to like amass a large percentage of because you actually need a grid and you need to plug in the machines and you need to keep them running and you need to continue to like improve your fleet efficiency so they don't become obsolete. So that's like much harder to amass a serious amount of hash rate through. But what we're seeing now is you can obviously amass a much higher hash rate at the pool level because
Hmm.
and that's really what matters because right now hash that's basically what like a physical hardware machine is basically just a hasher. It's just a number generator and it doesn't have really any control over like what the actual template of what is inside a Bitcoin block. There's some technologies that are changing that. Like for example, there are some things that I do and I don't like about it, but like Ocean, for example, and like Stratum V2, I suppose, would be like giving the ability of constructing a block template back to the hasher or the person that's like running the hasher. So instead of pointing to China Pool or Foundry Pool, they can basically construct their own. They can construct their own. And anybody that's mining on Ocean, they can construct like maybe they want to filter out JPEGs or they want to they're part of that school of thought where they want to filter out anything that's non-monetary data and they only want monetary transactions. However, they're going to do that. But like people are already doing that at like an individual level. Like we have clients that are doing that. They set up their own datum server and they want a certain like filter preset in terms of what they do and don't allow inside of Bitcoin blocks. And they're constructing that template. So if they do win a block, then they basically constructed what was inside of that block.
Damn. That's pretty wild to think. Yeah. And so, I mean, I guess this is the whole debate here going on, right? Should Bitcoin allow the
Yeah.
filters and should it not? Right. So,
Yeah. And
um, yeah,
yeah, we don't need to get into that conversation. I already
yeah,
see
yeah, yeah.
that stuff on my timeline that I'm just like, this is so redundant and ridiculous.
Yeah, I mean, I think at the end of the day, when Bitcoin's price is kind of just crab walking like it is, or we even get a downturn, I think Bitcoiners just, in a sense, get bored
See,
because,
something to
like,
argue about. Quantum
yeah,
now it's quantum computing. When is quantum computing going to destroy Bitcoin?
yeah.
Probably won't be at this rate.
I mean, if quantum computing, yeah, I mean, we don't need to get into that
Yeah,
whole thing,
yeah,
but I mean, I think at the end of the day, because our money is just, it's essentially digital now. It's just numbers on a screen. If quantum computing or the internet goes down or some of these other FUD things that they always throw out about Bitcoin, we'd be in a lot bigger problems than just, is Bitcoin not able to work? I mean, I think like everything would shut down at this point. So, that would be, I don't know, who knows, like a
yeah. I
world
mean,
war.
if Bitcoin was like so easily made obsolete by some quantum computer, then it wouldn't like someone would have already figured that out, and it wouldn't like Satoshi was even talking about that. That like that was like a future risk that it was going to have to upgrade to have like quantum resistant signatures. And
Yeah.
so like the nice thing about Bitcoin is it's not like a shiny rock which would have been really good if it could have like adapted to the digital era. Like everybody is living their entire lives on a screen. It would have been good if it could have adapted for that, but it can't because it's just a shiny rock. Whereas Bitcoin is not a shiny rock. It's an adaptive technology that could recognize, okay, this is like a threat. And so I'm going to evolve to be reinforced and be able to defend that threat.
Last bull run, we had exchanges blow up. You saw FTX, Celsius, BlockFi, you name it. But the true power of Bitcoin is getting it off an exchange into cold storage. This bull run, I'm trusting Trezor, the company that's been around for over a decade, and they just had a brand new release of the best hardware wallet in the game, the Trezor Safe 7. It's got the first audible secure element. No other hardware wallet has this. On top of it, I travel a lot, so I need an easy way to connect my Bitcoin hardware wallet to my laptop, phone, what have you. Therefore, it is the easiest way and has the best connectivity to access your Bitcoin. This is truly how you become your own bank, and the best way to do that is with the Trezor Safe 7. So you could go to the affiliate link down below and get yourself one right now, and do it quickly because they are flying off the shelves, folks. So do it with the easiest and best way to get your Bitcoin off exchanges. So go to the affiliate link down below, get yourself a Trezor Safe 7, and get your Bitcoin off exchanges in the easiest way possible. All right, enough from me. Let's get back to the show. Yeah, and I mean, obviously, it'll adapt, and I have faith that people are working on it a lot smarter than me, and they'll figure it out as well. So, I definitely think that it's the honey badger, man. So even with we've got all this FUD going on right now, and Bitcoin hasn't had the year in 2025 that I think a lot of people came into it almost expecting, myself included.
Yeah.
So as somebody that's operating a Bitcoin mining company, I think it's really interesting to be looking at the dynamics of what's going on with cost to mine a Bitcoin comparatively to the overall cost. So what are you, I guess, looking at with this bear market, coming from that lens?
Yeah, I think there's a lot of different variables that are involved in like whether it is profitable to be mining Bitcoin or not. I would say the number one variable that can determine if you can profitably mine Bitcoin or not would just be your cost of energy. Because if your cost of energy was effectively zero and you could scale as much as you want, then really as long as you have like the capital requirements to be able to purchase the machines and plug them in and keep them running and like managing the heat and the noise, then you could profitably mine forever because your input cost of doing business and running your machines is zero. So, and obviously that's not the case at Simple Mining. Like we don't have zero cost of power, but that's like the baseline. So to understand the cheapest possible mining conditions would be that. And then the least profitable, like there's a certain rate at which, depending on your machine, I suppose, we're like usually, like I would say, just like a good rule of thumb is like anything above 10 cents per kilowatt hour is just probably not going to be profitable unless you had like a ridiculously efficient machine that could somehow turn a small amount of energy into a ridiculous amount of hash rate, which that doesn't exist and probably won't exist until there's some crazy technological breakthrough. But I suppose like there's two, kind of just to zoom out a little bit, there's two sets of conditions that determine if you can properly mine Bitcoin or not. There's some that like you have more control over. It's more internally controlled, which would be your power cost, the actual hash power of your machine, your efficiency, which would be how well you turn the input of energy into a hash, and then the actual uptime, which is important and often overlooked. Like, yeah, you can have great power cost, hash power, efficiency, but if you only are capable of keeping that running for 10% of the year, then not going to be good. You're not going to get a return on the investment into the power cost, the hash power, and the efficiency of that hash power if you only have 10% uptime. So those are like what people have a little bit more control over. What people don't have control over is the difficulty level. Like, not unless you're a massive miner and you just want to unplug machines to give everybody a break on difficulty, then you can't necessarily or vice versa, plug in a million machines and no difficulty is going to rip, and a lot of people are going to be priced out. Most people can't control the difficulty level, which is just the aggregate of all of the miners on the network. If more people are mining, that's just going to the difficulty level is going to go up because you have to enforce the 10-minute block time. And then you have the Bitcoin price, which, as we know, nobody can control that and really has no idea where it's going, because a lot of people were saying that 2025 is going to be the year. It was going to hit all time high of 200K in Q4. October is the best performing month for Bitcoin, and everything got shattered. The 4-year cycle, it seems, is going to be shattered. I mean, you got the 3 green, 1 red candle, and we're on pace for 2 red candles in a row. So yeah, I think the whole 4-year cycle narrative, like after this year of just negative, the price just not performing what people thought it was, is going to get obliterated. And then the other thing would be the block subsidy. That's going to change. Like when the block subsidy was 25 or 12.5 Bitcoin, that's a lot different than right now, which is 3.125. It's going to cut in half again in April of 2028. And then you have somewhat of the wild card that you also can't control, which would be transaction fees. And those fluctuate a lot. When they do kind of go through a short stint of transaction fee bull market, a lot of people are bidding to move Bitcoin on chain, then that corresponds with very profitable periods for miners.
Yeah, so I guess what do you take of the price action, or just I want to dive into more about this 4-year cycle narrative, because I think I like how you put it, that the narrative is now obliterated. Did you ever, I guess, why do you think that it's become this way? Is it because TradFi has come in? Is it that the halving has less of an impact on the price? Why do you think that the 4-year cycle has gone away, or why that narrative even started to begin with? Did you even buy into that early on?
Yeah, I think that like the concept of like Bitcoin moving mechanically based on having cycle is somewhat ignorant of like the actual demand side. Like and maybe you could make the argument that like psychologically it's going to change be around the halving, but like the demand for Bitcoin is not some like predictable thing, and especially like the futures market of Bitcoin and the options market of Bitcoin, and like that's not some predictable thing that you can just be like, okay, every 4 years it's going to follow this exact price pattern, because you don't know how people are going to behave. You don't know the policy legislation that's going to come out. You don't know what governments are going to do. You don't know what the future of game. Like there's too many unknowns to like see a predictable pattern. So for example, like even just like examining the adoption metrics of like now you have governments having pro Bitcoin policy. You have probably the greatest catalyst, or kind of the first kickoff to catalyst, which was the ETFs, and now being able to practically get exposure to Bitcoin through equity markets. And now you have like publicly traded companies that are issuing fixed income instruments backed by Bitcoin collateral. You have all of these like new things that are involved in the game, and to think that the game is still going to follow the rules that it followed when all of those things didn't exist, and when it was a much different holder base that was holding all of the coins that were realized, and you had all of the different players and exchanges, and you had FTX exchange, and you have all this other stuff going on, and the macro conditions, which are much different now than they were in previous cycles, that it's just like it's almost like you're condensing a bunch of information to try to fit your trend, and that's not the way that I believe things work.
Yeah, and I'm kind of with you on that. I mean, I always thought that it kind of just fit more of like the 4-year business cycle, and like all of these different narratives now. But you brought up kind of how, and we've been talking about it, how like the TradFi world is starting to get into this. I have maybe I don't know if I'll call it like a doomsday, but If you look at traditionally all these other assets, once they start to get financialized, they kind of, I guess, go haywire in a sense. If you look at real estate, it's a prime example, right? Something that used to be, your home, right? Something that people would look at as a basic need now is super financialized. It caused the 2008 recession, because just banks and everybody just saw how much they could profit off of it. Gold and the silver and precious metals market, kind of similar, right? I mean, you see a lot of, banks. JP Morgan has been caught for manipulating the precious metal market and everything else. Is there a worry that you have of, these TradFi, I guess the TradFi bros coming in and potentially, I guess, like ruining Bitcoin or ruining any of these Bitcoin businesses? Why would you ever hold generational wealth on a piece of paper? It doesn't make sense. You need a foolproof solution, and I've got it for you. You could get this as low as $25, and if you use promo code Green Candle, you could get 10% off. Being around for 12 years, they've engineered the perfect and most easy to use solution. I've partnered with CryptoSteel to offer you guys just that. It is the cheapest and most secure way to store your seed phrase. I don't know about you guys, but I don't have too many things where I think 1 ton is going to fall on this, but it could survive all of that and more. So go to cryptosteel.com. You can use promo code GreenCandle. You can get 10% off your entire order if you go there today. So go ahead and protect your generational wealth and do it with CryptoSteel. All right, enough from me. Back to the show.
Yeah, I think maybe like you would need to define what you think by ruining. I mean, I guess like if there were a way to permanently suppress the price of Bitcoin to, let's just say, it was stuck under 100K for the next 4 years, then like would that ruin Bitcoin? I don't know. I guess it depends on like what you're, if you're in Bitcoin for the price gains and like you want to get more in dollar terms, which at the end of the day, I think most people are like they want to, like everybody talks about Bitcoin being the best performing asset ever and it being such a good store of value. And if it's not increasing your, like everybody is paying for stuff on a day to day basis, you're paying for your rent or your mortgage, you're paying for your food. And most people, if you live in the United States, you're paying for that in dollars. Now there's the small subset of people who are buying Bitcoin gift cards and they claim they're living on a Bitcoin standard, but you're paying your taxes in dollars. You're still living on a dollar standard. If you like, could I speculate on when we transition away from a fiat standard into a Bitcoin standard? Sure, yeah, maybe that could happen, and then you don't need to be evaluating things in dollar terms. But I think for like the near term and the foreseeable future, people are going to be thinking about it in dollar terms. And so, is Bitcoin a failure, and has it been ruined if it no longer appreciates your purchasing power in dollar terms? And like, could that happen? I really hope not, because a lot of like my investment in my future, and I'm definitely hedging my bets on the side of it doing well in dollar terms and appreciating my purchasing power over time. But like, sure, somehow they could manipulate, maybe somebody, some institution, some hedge funds, whoever is pulling the strings behind the scenes is somehow manipulating the price and suppressing the price of Bitcoin. But it's like those narratives have always existed. They were always around. People came up with like conjured the doomest of doom scenarios and why Bitcoin's going to fail and it's not going to work. And every single time it destroyed people's expectations to the upside. So, like, does that happen again? I would say yes. That probably will happen again, where people will have all this FUD in their mind of all this price manipulation, and there's all this paper Bitcoin floating around, and quantum computing is too big of a risk, and everyone's just, oh, so terrible, and then it's gonna rip your face off.
I mean, I agree with you. I think once we get a lot of group think, Bitcoin just does the opposite. So now that we have this quantum computing FUD, I mean, who knows? Maybe 26 will be a crazy year just because everybody's kind of bearish now that we've had the opposite happen here in 25. But I'm curious, do you have anything that you think, any predictions going into 2026? What we've got ahead?
Yeah, I think there's like a couple things to look at. You have AI and automation, which I think is going to significantly lead deflation. And we're entering like somewhat of a like resource crisis where we want to be able to reshore all of these AI projects. We want to win this AI arms race, but we have a lot of hard physical restraints that cannot be solved by, like, I'm just thinking about it from, I suppose, the macro perspective. A lot of this stuff that can't be solved by money printing alone. And you already have like record amounts of debt, and you have all of this deflation, you have prices going down in the same levered debt system. That's going to cause some market turmoil without a doubt. And then, like, we're starting to see, I think, I mean, the markets have done well. Like Bitcoin is really one outlier. Like the S&P 500 has done well this year. The Nasdaq has done well this year. The only things that really haven't done well, I actually think that Bitcoin is underperforming bonds year to date. So that's almost like kind of crazy to think that how is Bitcoin underperforming government IOUs? Like that doesn't make any sense. And a lot of it, like what you hear a lot of people say, is it's, well, like liquidity is just being constrained from Bitcoin because it's acting like a risky tech stock and not a neutral reserve asset. So I think at this point in time, just based on like the sentiment, and if you were to combine the understanding of Bitcoin of all of the people that have the most money to move the price of Bitcoin, then their understanding of Bitcoin is it's not a neutral reserve asset. Gold is the neutral reserve asset, and Bitcoin is just like a high beta tech play. And so it's basically acting like that. It's acting like a high beta tech play, and that's somewhat of like price discovery before like it's struggling. And the only thing that I think will really change that would be like a crisis response. Because if you had all of the prices going down, then that's going to lead to asset liquidation. You're going to have policy panic, which is going to lead to currency debasement, and then eventually that's when Bitcoin would win. It's not going to win right now when we're in a deflationary shock.
So do you think AI and Bitcoin are gonna, I guess, in a sense, grow together in conjunction, like a lot of people believe, like it's going to be the currency of the internet, and AI is going to help supercharge that?
Yeah, I don't know how much I could speak to AI actually using Bitcoin, but I would, like, a lot of people think that AI is a bubble. And just from my personal experience and the growth that I've seen in a lot of AI technology just in the last like 3 years, I couldn't be bearish on it. See, it's just in the way that I use it in my day to day life, and the tasks that used to take me 20 hours, now I can do in 4 hours with the assistance of agents or using certain LLMs, or doing certain things. Then I don't know how you could be bearish on that, because that's going to eat entire industries that are spending astronomical amounts of time building things and condense it into like an hour. You'll be able to do the same thing in an hour. So what that's going to lead to is like global competition. It's going to push prices down. I think ultimately that's going to lead to deflation, which is going to need, like, you're going to have the labor, the price of that going down, and ultimately that will lead to rates on the long end for U.S. debt going up, and they can't survive that. They can't survive rates on the long end going up, and so they're going to have to either yield curve control via absorbing the demand for treasuries by the Federal Reserve, quantitative easing, which is like everybody's been the rumor quantitative easing coming back, but it is a real thing because like they're not going to default on their debt. They're not going to let the interest expense just absolutely balloon and roll over at super high rates. Like they're just not going to do that. And the only way to fix it is buying them yourself, because nobody wants them. They want gold.
Yeah, 100%. And I definitely think that, yeah, I mean, even though that's what everybody's kind of talking about, there is, I mean, when you put liquidity in the market, it's just, I mean, everything's gonna, I guess,
Yeah, I
asset bubble is
really
gonna kind of
don't like when there's an absolute nuclear liquidity bomb similar to what happened with COVID. Like really, like it would be hard to mess that up unless you're holding bonds. Like that
yeah.
would be the way to really lose in that scenario. But it's kind of been, I've definitely been humbled this year in terms of like, at the beginning of the year I was having all these conversations with like a lot of my in-laws who are bullish on gold. They really like gold. They really like the precious metals, and I was saying no, Bitcoin's going to outperform it all. Blah blah blah. Like my spiel about Bitcoin's so much better, and like in my mind, like I know, and like looking at the fundamentals in the world that we live in, like Bitcoin is a superior asset class. Like in terms
Mhm.
of money, if it's competing on the money basis, in which a lot of these central banks are using it for, like a neutral reserve asset, it's better. It's just technically better. The technicals are better, but the understanding is not there. Like the information is not widely accepted that it is a better method. So gold is going to do better in an inflationary situation, a deflationary situation, a sovereign stress situation, a multipolar geopolitical situation. Gold is just going to win and it's going to keep winning. And I think the only point at which, like, I just posted something today about Trump at 2024 Bitcoin Nashville saying that someday, like it was right when Bitcoin had just passed the market cap of silver, and he's making a comment about how someday it probably will overtake the market cap of gold. And in my mind, the only way for Bitcoin to really do that is when all of the capital that's just deployed into gold right now starts to realize that that capital would be better in a better situation deployed into Bitcoin. And like, how does that like, maybe it takes years, maybe it takes 10 years. I don't know at what point that happens. But for Bitcoin to become a greater neutral reserve asset than gold, it's going to take a massive educational wave for people to understand us better. And maybe it
Yeah.
never happens. Maybe you just have to, tough luck. You gotta work with the inferior technology.
Yeah, I mean, it definitely seems like there's that information asymmetry right now. I mean, Michael Saylor said on interviews like a while ago that he had, like woke up with like cold sweats that somebody would figure it out. And, he's been buying Bitcoin, since like 2020. And now it seems like it's the craze. But even then, like, Saylor's head and shoulders above everybody else. And we don't even have like, we have Mag 7 companies now coming in and on the Bitcoin mining side, but Bitcoin on the balance sheet still is, I mean, it's still kind of like a fragment of the entire market. I know in the Bitcoin space, we get a lot of hype around them, but seemingly there's not one of these big players that's going to move the needle just yet coming in. So I think 26 is going to be really interesting, and I'm really excited for what's to come. But Billy, you've been very generous with your time. Why don't you tell people where they can find out more about you and more about Simple Mining?
Yeah, for sure. I'm pretty active on X, Billy Boone 32. You can find my profile there. And then there's also Simple Mining IO. That's our company account on X. I'm also on LinkedIn. We pretty much are. I'm on every single social, and then I have my Substack that I write on, which is the Bitcoin Mining Investor, and that's where you can read more of my thoughts.
Awesome. Well, I'll put all that in the show notes. And Billy, thanks so much.
All right, thanks, Brandon. Appreciate it.
Thank you guys all for tuning in to another great episode of the State of Bitcoin podcast. If you found some value in this one, please hit that subscribe button and that like button to help send this one to the masses. And I've got a surprise for you guys. I've got 2 more episodes that you have the chance to watch here. So go ahead and click one of them, and I'll see you guys all at the next one.